Kit Juckes, there's something that has to give is the fear in the markets. We've had an extraordinary set of days in the equity markets. We're 3.5% below the record highs on the Dow back to January. Can you advise Jay Powell this morning, Kit Juckes, that it's all clear on the market turmoil that we've seen the last 3 and 4 weeks?
He's done well in terms of the Fed has been helped by a bond market that hasn't seen 10s hit 3, and at sub 3 we've looked at it and said that's not really that high. A 3% 10-year note yield is not a high yield. It was 14 on the day I started, and in that sense the market's rising again. But that doesn't detract from the fact they still need to tighten. We can't just throw more gasoline on the equity market bonfire and have a party every day. So, he does need to continue with this path. So he still does need to go there. Doing fine so far, but they haven't finished hiking.
Jeff, what do I do with my cash this morning? I'm absolutely baffled. I'm twisted. My head is spinning around. 12 on the VIX to 55.0, down to 27, all clear. And now I'm down this morning at 16.03 on my Bloomberg. What do I do with my cash this morning?
I don't think it depends on you, on the market. I think it depends on you. Look, you could still be over-allocated to equities after years of stocks outpacing bonds, even after this pullback. And it might mean it's time to sell some equities. If, on the other hand, you've been holding some cash, waiting for a pullback opportunity, it's not too late. We're going to get more opportunities to buy this year. I think we're going to see a lot of dips, much like what we saw earlier this year, tied to bouts of economic strength and surprisingly strong economic data. But look, rebalancing that portfolio back to its intended targets, incredibly important this year for the first time in a while, given that high level of volatility and the chance of a bear market beginning as soon as the middle of next year.